Yo, what's up? Sunday night. Hope you had a nice weekend. Really nice down here in Florida. All right, folks, I want to talk about gold because something really strange is going on there. If you look at futures commitments, which I do every week, and I keep a database on this stuff. Very interesting because the entire rally in gold since the end of January has been liquidation of futures positions. And that means shorts covering and longs liquidating. The whole entire rally. And I just find this very odd because you would think the market rising would be attracting money, attracting financing. You would think that open interest would be rising as more and more funds are committed to, by funds I mean money, as more and more capital is committed to the rise. But actually the opposite is happening. And here's another thing that's really weird because the ones who have been covering shorts, in effect buying higher and higher, those have been the commercials. That's the producers, the merchants, the swap dealers, all the so-called, smart money, which typically I always talk about these guys because in physical commodities, I've always followed what they do. All right. And they've been short covering aggressively since like when the price was way down at like 2,600, 2,650. And oddly enough, it's been the managed money, these speculative futures funds, large speculators who've been selling their long positions to these commercials who are covering, buying. And so open interest is dropping. Money's leaving the market. Now, I know that futures don't lead. It's not like I understand it's not a tail wagging the dog type of situation. Like what's important is the cash price of gold, physical demand of gold. That is going to dictate where the futures go. Okay. But I just think this is weird, man. Like I'm watching this and this has been ongoing now for like over 3 months. Unbelievable. I mean, it's been all liquidation on this rise. Totally. And it looks like to me that the commercials, producers, merchants, swap dealers, they were really bearish on the price around 2,600, 2,650. And it looks like they just got it wrong. I think they probably just wrongly guessed on what was going to happen in terms of speculative demand, central bank, wherever it's coming from. And they were forced to cover. And that's what they've been doing. So this is a rarity. I mean, you don't see something like this too often. This is why I always say, like, I follow the commercials because they're in the physical market. They own the stuff. They have a very good feeling or sense of price and value. And they're not easy to squeeze out of their position because they can meet their margin calls. First of all, they have physical against their futures position. And a lot of times, at least the big commodity players, they could issue commercial paper as short-term financing to meet margin calls and stuff like that. And it's interesting because a friend of mine brought this up to me about the commercial paper. He was a former trader for Cargill. And I went and I looked at commercial paper outstanding and it shot way up in this gold rally since the beginning of February. I mean, it just was like kind of flat. And then all of a sudden, boom. So I'm wondering, like, these commercials got hit with a bunch of margin calls. It looks like they were borrowing in commercial paper to meet those margin calls. I don't know. And it's just, to me, it's a very, very strange situation. The commercials were all bearish, at 2,600, 2,650, like they were heavily short. And this whole rally, man, has been just short covering. And then you got the big speculative funds that have just been selling their long positions into that buying that is coming from the hedgers, the commercials. So it's really weird. It doesn't mean the rally can't last. I mean, macro is a different thing. I mean, we might be in a paradigm now where central banks think they need to really, really stockpile gold as part of their reserves. I know that's been going on now for a number of years, and it really picked up in 2022 with all the sanctions on Russia and that stuff. But, we just might be in a different environment now. And things have got to adjust. But it looks like the commercials got really caught off guard here. And, I wouldn't be surprised to see that price eventually come back down to that level, 2,650, 2,600. But right now, I mean, when I look at that total liquidation in gold futures, which is, I mean, like I said, it's a rarity. And it's just, I'm scratching my head, to be honest with you. I'm scratching my head. And it's not just that they're short covering. You get all these big speculative longs selling out of their longs, reducing their long position. So both sides, the commercials who were short, the speculative funds who were long, both sides are getting out. So I don't know. I have no real explanation for this. The price keeps going up. I have no real explanation for this. It's just a strange phenomenon. That's all I want to say. So right now I'm just watching it. I'm just watching it. I mean, if you put a gun to my head and say, what do you think? When I see something like this with financing leaving the market, that money coming out, both on the long side, on the short side, I just, it's like you're running out of gas. You need the fuel. The money is the fuel to keep the trend going. I mean, if you're running out of gas, if you're driving a car and you see that gas tank going down, 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 eventually the car's going to stop. You run out of gas. That's what it looks like to me. Anyway, Sunday night, and I don't know, gonna think about it a little bit, but yeah, I just wanted to bring that to you. I hope everybody's doing well, and new week coming up, tax week, April 15th, sucks. All right, have a good one, everyone. Have a good night. Please like and subscribe, and don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I just sent out the new report a few hours ago. So if you want to get that, go sign up. Bye.